breaking through its previous low, breaking through the previous low of 1985. Sorry, I just completely botched that whole potential responses from the British authorities. All right, so the British pound hit its lowest level against the U.S. dollar on Monday. Alex, what do you think's going on? Welcome to episode 55 of Farm to Markets. Today's topics are if now is the time to buy gold, why the pound is falling, and we have more lightning round questions at the end. The S&P 500 is down about 22% since January of this year, and inflation is at 8.26%. Naturally, many think of adding gold to their portfolios in these types of situations, but the metal has been down about 11.3% year to date so far. Is it still prudent to hold gold in a portfolio?
Well, if we're not talking about physical gold and specifically like an investment asset like GLD or GLDM, which are ETFs that track gold's spot price, they haven't been particularly good investments, as Tom alluded to this year, and historically it's actually kind of volatile. It really kind of depends on what you want to insure yourself against. Gold, you'd typically think does pretty well when you're in an inflationary environment, but at the same time, gold doesn't really pay you much of a dividend, and so when you have inflation, people are looking for ways to hedge against it as much as possible. If you sit in cash, you're losing 8-9% just sitting in cash. So I don't think it's in general a bad idea to put a few percentage points in general in your portfolio as gold. Would I put all my eggs into the gold basket? Probably not. It's just hard to say. But right now gold has gone down, and people are looking for, people in foreign markets are looking for dollars, and people here are looking for yields. So anything to beat inflation, and so far gold hasn't been all that attractive to those people.
As most people probably know by now, we don't speculate on what the value of an asset might be in the future. The way we invest is we hold assets or companies that currently have value, or right now at least have more value relative to everything else out there. Gold is no different in terms of it being an investment vehicle. When it has value, we own it, and when it doesn't, we sell it and we don't own it anymore. However, for the context of this question, you're probably referring to more like physical gold. That seems to be what people are interested in or talking about right now. Physical gold is by far the most attractive doomsday investment, though. That's what people flock to. However, I don't see it as being that attractive if the economy actually went under. If things got really, really bad, and in this scenario, your portfolio drops to zero, that means that every major company and every major firm in the US or even the world has gone belly up. So in that scenario, it would be bad. Last time I checked, grocery stores don't accept gold as a currency. And if the economy actually got that bad and went that far south, I doubt grocery stores would even operate. So this means you have to have things of value in order to obtain things to keep you alive. And I'll paraphrase Warren Buffett. I'll probably botch this quote, but he said something to the effects of whether a currency 100 years from now is gold, seashells, shark teeth, or paper, people will always be willing to trade for Coca-Cola or peanut brittle. So instead of gold, if things got bad, I see food or water or clothing or protection or skills to be more valuable in that kind of scenario. So when things look gloomy in the economy, such as right now, I wouldn't rush out to go buy physical gold. That's just adding more risk, and you're betting on the economy going sour when it might not. I have a little more faith in the economy. I would encourage people to have more faith in the free markets and just in pure human willpower to push through bad economic times.
It's interesting. Whenever I take on new clients, who have never invested before, I will tell them that they now have a heightened sense of the market and that for the first time in their lives, when the hourly market report comes on the car radio, they're actually interested and their ears will perk up and they will actually listen. Gold is one of those investments where there's always doomsdayers out there who are screaming and yelling that you should buy gold. And even a broken clock can be right twice in the same day. And then when the markets go down, people naturally have a heightened sense of awareness of gold because now they're interested because they're concerned about the other investments that they have. I had a client here the other day and we were talking about gold. He was saying that gold was one of the best investments he ever had. And I said, that's really sad because I've got a piece of paper that I wrote this down in 2008 during the financial crisis because clients were screaming and yelling to buy gold. And I was explaining that gold has been a horrible long-term investment. In fact, going back to 1980, gold has only appreciated at 1.5% per year. And if you sell it, you have to pay a 28% capital gains tax rate instead of a 15% capital gains tax rate. So it's really not that great of a long-term investment. So, but sometimes it can be a great speculative investment in the short term. And sometimes some of our models will introduce opportunistic purchases into gold. But know this, is that gold tends to go up when governments are printing money without backing it up with sufficient growth in their gross domestic product. So gold tended to do well during the pandemic because our government was printing money as fast as they could get the printing presses running, and the price of gold went up because our other cash assets were worth less. But what's happening now? The exact opposite. The Federal Reserve is taking money off the table. And what's happening is that asset prices, stocks, real estate, commodities, including gold, they're basically deflating in value as we take that excess cash off the market. I'm not speculating, but I just don't believe that gold is a great speculative investment right now when it seems like every power at the Federal Reserve is trying to suck the price inflation out of gold while people are interested in buying it. Now, with that said, if I was a Brit living over in England and I saw what was going on over there, where their central bank is now buying anybody's stupid bonds and stupid debt, and they're cutting taxes and pumping, pounds into the British economy, the Brits might want to consider buying some gold. But as an American, I'm not interested in it right now.
You should save some of your thunder for the next question there. My other question is, why is that piece of paper not framed hanging in our bathroom in the office here? That one you wrote down in 2008?
Just out of curiosity, what is on that paper?
Yeah.
It's just some notes. It says October 9th, 2008, the S&P 500 was at 1,565, and the Dow Jones Industrial Average was at 14,164, and that gold in 1980 had an intraday high of 870, and then it closed at and the S&P was at 112. And what I was showing essentially was that the stock market did infinitesimally better than gold did. And it's true today. I keep it here because every time we have this conversation, like back in March of 2020, I was having this conversation again with people as the pandemic scared everybody. And I just broke it out and said, you can buy gold if you want to, but the numbers here don't really play out. Now, I say that when we were actually buying gold in some of our portfolios then, and for a short period of time, it made out to be a pretty good investment. But I just don't think that for people who are scared, don't be buying gold because you're scared. Buy gold because it makes sense to buy it.
Yeah, that's definitely going to go in the Joe Coco Museum when you retire. We'll have to collect other things. But you're right. Since January 1975, gold's had an annualized return of 5.21% relative to U.S. stocks, which have an annualized return of about a little over 12%. Standard deviation from gold in the same time period is 5.3%, relative to stocks, which has a 4.34% standard deviation. And basically what that means is that gold has been more volatile than stocks, but stocks have had a significantly higher return than gold has since January 1st in 1975. Now, I don't have anything against having gold in a portfolio, but you have to keep in mind, like everybody already said, it's more volatile and the returns have not been that good. What starts to scare me is when people have an all or none mentality where it's like, I'm going to completely get out of stocks, I'm going to get out of bonds, I'm going to get out of everything else, and I'm going to load up my portfolio in gold. Those are the kind of things where it makes the hairs on the back of my head, my neck stand up, because if you're going to be holding this for a long period of time, it is not historically it is not performed well. And for you to actually get the benefit of holding an entire portfolio of gold, you got to pick the timing right. And to Drew's point is that when I said gold, I kind of meant your life portfolio. So if you want to have physical gold, great. If you have some gold in your investment portfolio through like an exchange trade fund or something like that, that is kind of an all-encompassing comment. But historically, compared to other investments, gold's done all right, but it is certainly not performed the best.
What's interesting about gold is it's a good reflection of the fear that's going on in the economy, the fear that people have. When people are scared, they want to channel it into physical gold, but I don't think those fears should be dismissed. I think they're rather important and important to address. But I think instead of putting it into gold or thinking of whether that's physical gold or in your portfolio, get right with your friends. Make friends with your neighbors, your family. Get right with God. If you're into guns, have some guns, food provision, those sorts of things. I think that would be a better venue to channel your fears than buying gold bullion. But
and also, as far as like utility, silver has far more industrial value than gold actually does. And I read a couple articles, and I don't know if this is true or not, but I guess a lot of surgical instruments are plated with silver to prevent bacteria from growing on them, and like catheter tubes and other stuff like that have a lining of silver in them so that bacteria doesn't grow on them. And then there's also a lot of electronic devices that use far more silver than they do gold. So if you're thinking about metals for a utility standpoint, silver is actually more widely used industrially than gold is.
So they'll still be manufacturing catheter tubes when the economy goes belly up.
They probably
That's
will,
the new
but I
currency.
would hate to see
Yeah.
it.
I'll give you 6 catheter tubes for that chicken.
Yeah.
Well, I think the other thing is that lots of people buy gold, but really not that many people sell gold because first off, when you buy gold, it's easy. It's really easy. It's like a timeshare. Once you buy it, it's really easy to buy a timeshare. It's really easy to buy gold. Trying to sell it is a lot more difficult. And people generally don't sell gold when it's down, and they don't sell gold when it's up. The only people who sell gold are the kids who inherit it. Is that when somebody dies and dad's got a whole bunch of gold coins in the family safe, and the kids sit around, they go, well, do you know any gold merchants in town where I could do this? And they almost always take a haircut because the commissions on selling gold are extremely high, and the spot price is the bid and ask price are so wide that it always tends to land in the gold merchant's favor. So it's an emotional investment, and like I said, a lot of people buy it, but very few people actually sell it.
All right, we'll move on to the next question. All right, so the British pound hit its lowest level against the U.S. dollar on Monday. Alex, what do you think's going on?
So this is not actually a new problem. It's news to us because we've been seeing other global currencies decline in value relative to the dollar recently. But back in the early 1990s, and then at the eve of the financial crisis in 2007, the pound was actually significantly stronger. And since 2007, the pound has consistently declined against the dollar to now they're basically at parity. Other currencies, like I said, are doing the same thing. And part of that is because people don't really want pounds or euros or anything else right now. 87% of global trade is happening in dollars. And when everybody needs dollars to import the things that are increasingly in scarce supply, dollar demand goes up and the value of the dollar goes up in relation to other global currencies. Meanwhile, countries like the UK are trying to make their exports more valuable by doing things like cutting taxes, printing money. Bank of England is buying up bonds, all kinds of different things. They're basically monetizing their debts right now. So that's putting pressure on the pound, on its value. And, for a country that is now at a historic high for its reliance on exports, the UK's GDP is now 31% exports, believe it or not. You really need your exports to be attractive. So depressing the value of your currency in comparison to the US dollar is just good policy for them, because it makes their exports cheaper for Americans to buy, which the United States is the largest global consumer market. So I would expect the UK to continue to devalue their currency, as well as other countries, in relation to the dollar, to try and keep especially the big exporters so that they remain competitive.
So basically what's going on is the United Kingdom's economy, it's on the brink of a meltdown. And the government is trying to boost their economy through a couple of major programs. Turns out investors don't have faith in the success of these programs, and they're demonstrating their displeasure by rapidly selling UK assets, which obviously decreases the value of those assets, which makes them more unattractive, which causes the pound in which they're traded to decrease or weaken relative to other foreign currencies. Biggest issue that investors have with these programs is that they're going to pile on government debt, and they're possibly going to lead to higher interest rates. So the new British Prime Minister, Liz Truss, I believe, recently put in place an energy price guarantee program that would limit the amount that suppliers can charge customers for gas and electricity. Well, this package is supposed to cost the government like 100 billion to 150 billion over the next 2 years. At the same time, you have British Chancellor Kwasi Kwarteng, I think. Is that how you pronounce it? Anyway, he recently announced a $45 billion tax cut program, which could possibly cause the Bank of England to become more aggressive with raising interest rates. So this is going to affect people differently depending which side of the currency you're on. Alex kind of alluded to it with whether you're an importer or an exporter. A fall in the value of the pound is going to increase the price of goods and services imported into the UK from overseas, but it'll also make it cheaper for other countries to import goods from the UK. So it's really not country specific. It's just going to change or shift the demand globally of goods and services.
You've all made wonderful points that I'm not going to say again, but I will say is that what they're doing is they're trying to kick the can down the road, because ultimately this is going to be paid for in future inflation for the average Englishman and woman. So this is doing stupid. They're essentially trying to direct where the economy is going through central bank policy, and ultimately it'll hurt the very people they're trying to help. If you make your own currency worth less, that's going to have an impact on your citizens. It might get them through this dark area, but there will be a payback, just like we are experiencing right now with inflation in the United States. Is that the same things that the central bank in England is doing to try to get them through this economic downturn is exactly what we did during the pandemic 2 years ago, and now we're paying the price.
If Europe was a company, like if Coca-Cola basically came out and said that we're going to spend more money and we plan to make less, nobody would want to buy Coca-Cola. And it's the same thing that's going on in the British government, is that their plan is to give energy subsidies, spend more money, and then but they're also going to cut taxes. So I think that's scaring a lot of people. All right, we're gonna move on here.
Well, one last thing is John Maynard Keynes was an Englishman.
Thank you for putting that in there. All right, we'll move on to the lightning round. In the world of competitive chess, Magnus Carlsen is the reigning 5-time world champion and possibly the greatest chess player ever. But in a prestigious tournament in St. Louis, Magnus was beaten by a 19-year-old up-and-comer named Hans Niemann. However, Magnus said that Niemann's play was suspicious and posted a cryptic tweet on Twitter saying that he can't talk or he'd get in trouble, basically implicating Hyman, or basically saying that Hyman cheated in his match against Magnus. Do you think Hans Hyman cheated in his match against Magnus Carlsen?
Well, in doing a brief bit of research, apparently this guy had been caught cheating twice when he was a junior chess player at age 12 and again at age 16. He claims he's not doing it this time. It doesn't sound like there's any direct evidence, but there are all kinds of apparently ways to cheat in chess, including electronic ways. I don't really know, but considering the guy's got a history of doing it, I guess it wouldn't surprise me.
I agree with Alex. If he's got a history of doing it, I think it's worth investigating and looking into. Magnus Carlsen, he seems like a pretty stand-up guy. He loses with grace when he does. And he didn't really make a big fuss about it. He basically just withdrew from the match and said, I'm not going to participate because I speculate there's some cheating going on.
It's hard to say. I'd say the odds are that there was some cheating going on. If anything, this is a great marketing opportunity for people who formerly didn't follow chess to now be following chess. So when this shows up on ESPN, there'll be 4 more people who will watch.
Yeah, it's interesting to watch for like 5 minutes and then it gets boring. But I think he cheated. From what I've heard, it's incredibly hard to figure out if somebody actually cheated in the game or not. So we may never know. So I can pretty much make whatever bold prediction I want, and nobody's ever going to cheat on it. So I'm going to say he cheated. All right. For the first time in history, NASA crashed a satellite onto an asteroid with the goal of trying to change the orbit of the space rock around its larger asteroid parent. Is this an effective use of taxpayer money?
Yeah, I think so. I think it falls under the realm of national security or, emergency preparedness. There's very little complaint when either, state, local, or even the federal governments do things to prepare for, hurricanes or wildfires or whatever. It would be nice if, somebody looked up at a telescope and said, hey, that's going to hit, in the middle of Kansas or whatever. It might be nice if we could nudge it a little bit. So yeah, I think it's pretty good use of taxpayer money. It beats the alternative of not having any option.
I guess only half a penny of every federal tax dollar that you pay goes to NASA. Would I rather save that penny and live without knowing that we could change the trajectory of an asteroid? Sure, yeah, maybe. But I guess I'd have many more government programs that I'd rather see managed better than NASA right now. So I have no heartburn. That's fine.
In theory, I'm comfortable as a taxpayer paying some taxes to protect me from asteroid destruction. But I'm cynical that will they actually push the asteroid away from us? Or will we push it towards areas of the country which don't vote correctly?
Wow. That was a seemingly innocuous question you just made political. So I'm going to say yes, I absolutely want my taxpayer money going to something like this because I do not want to get hit by an asteroid. All right, last question. The CIA launched a new podcast called the Langley Files. So it's their only podcast, and it's produced by the CIA. Are you going to listen to it?
I had no idea that this was even a thing until I saw the question. I would be interested to check it out, though I would suggest before anybody who wants to listen to it does, they Google Operation Mockingbird.
I think it's a big conspiracy. I think that they're trying to I don't know. If you don't trust the CIA, I don't know why you'd listen to their podcast. I might listen to it just to see what it's about, but I'm not dancing in circles excited about listening to it religiously.
I'll certainly listen to it. I think it'll be entertaining. The national agency responsible for distributing propaganda overseas is just bringing their product home.
Yeah, I listened to the first episode.
Operation Mockingbird. Google it.
Yeah. So I listened to the first episode last night on the way home, and it was not particularly thrilling. They're just going to go into like the history of the CIA and stuff like that. I suggest you read the fine print because in somewhere it's like, if we tell you we have to kill you. I don't know if they're just trying to like just leave the door open for if they have to make a hit on somebody. Be like, do you listen to our podcast? Like, yeah. They're like, well, you're dead.
Isn't the point of the CIA kind of to keep their play their cards close to their chest? Should they be?
In fact, in the first episode, they said that's exactly what they're supposed to do, and then they gave some reasons why they actually went ahead and did a podcast. So I don't know. After the first one, I would definitely not listen to the first episode. It was not worth the time. Maybe the second one will be better, but it was not that great.
After the erosion of public support for the FBI and the U.S. military, the CIA is playing little offense here to try to get ahead of the curve in public opinion.
All right. Well, that's it for episode 55 of Farm Markets. So we'll see you again next week.